everyone, welcome back to Corporate Decoder. Today we're diving into a company that seems to have adjusted its adjustments, which, spoiler alert, might mean some numbers weren't quite right the first time around. It's like baking a cake and realizing you forgot an ingredient only after you've put it in the oven. We're looking at a report from AstroNova. In short, they had to fix a mistake in how they calculate some of their financial goals for their executives. This affects how those executives get paid. So it's important to understand what changed and why. Basically, AstroNova is making sure their top people are rewarded based on a more changed and why. Basically, AstroNova is making sure their top people are rewarded based on a more accurate picture of the company's performance. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. Come chat with other corporate decoders. So what exactly happened? Well, it all goes back to June of last year. The company's Human Capital and Compensation Committee, or the people in charge of deciding how much executives get paid, made some changes to a plan called the Senior Executive Short-Term Incentive Plan, or STIP for short. It's a plan that sets goals for the company's performance. If they hit those goals, the executives get bonuses. The original plan included goals for making money and managing cash flow, both for the whole company and for specific parts of the business. However, there was a mistake in how they defined AstroNova Adjusted Operating Cash Flow, PI Segment Operating Cash Flow. Those definitions are crucial for calculating how well the company is doing. The problem was that the first version of these definitions left out some important factors: changes in inventory, what's owed to the company, and what the company owes to others. Imagine trying to figure out how much money you have without counting what's in your bank account, what people owe you, and what you owe on your credit card. It just wouldn't give you the right answer. A few days later, the committee got together again and fixed the mistake. They changed the definitions to include the impact of those missing items. This means the calculations will now give a more complete and realistic view of how much cash the company is actually generating. Let's break down what each of these terms actually means now that they've been fixed. AstroNova Adjusted Operating Cash Flow is basically the company's profit or loss from its main business, but with a few special adjustments. They take the standard profit number and subtract acquisition expenses, inventory costs, restructuring charges, depreciation, and capital expenditure, while also adding the impact of changes in inventory, accounts receivable, and accounts payable. Why all these adjustments? Because the company wants to create apples to apples comparison. Pay segment operating cash flow does the same math, but only for the product identification part of the business, which I could not find what it exactly means, but it could be that it has to do with printing or labeling. This calculation takes the segment's adjusted operating income, adds back depreciation and amortization, subtracts capital expenditures, and includes inventory, receivables, and payables changes. Finally, aerospace segment operating cash flow does the same thing again, but this time for the aerospace segment. It takes that segment's adjusted operating income, adds back depreciation and amortization, subtracts capital expenditures, and factors in changes to inventory, receivables, and payables. Now let's talk about why this fix matters. By leaving out those key factors, the original definitions could have painted a misleading picture of how well the company was really doing. For example, a company could look like it's generating a lot of cash, but if it's not collecting payments from customers, that cash flow isn't sustainable. Or a company could be selling a lot of inventory, but if it's not replacing that inventory, it could run into problems down the road. These corrections affect how executives are compensated. If the performance metrics are off, so are the bonuses and incentives tied to them. It's a big deal making sure those metrics are accurate so people are getting properly awarded or not. Alright, that concludes the breakdown of AstroNova's filing. What's your take on these adjustments and what they signal for the company's internal controls? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.